Hi there, welcome to Neppy Invest and welcome to another answer and reply video. The date is the 14th of September 2024. Time is currently 8:37 a.m. and it seems like this time of year I should not be recording videos because between the blind and the window sill, whatever you want to call it, there's a very small slither, and this time of day the sun is in the exact wrong spot. So my eyes are almost in the sun but not quite. So hopefully I don't get blinded if the sun moves into exactly the wrong spot. So let's get stuck into it. I want to do as many of your questions and comments as possible. Going back 3 weeks ago to Joe Blogs, who talks about Nuix. Originally bought into Nuix after they listed for $8 or $9 and kept buying as they dropped down and down. So averaging down. I do know a lot of people hate averaging down. I wouldn't say I'm the biggest fan, but I don't mind averaging down if it's a high quality company. In fact, I prefer to average down if it's a high quality company because I like to see the share price drop if it's a high quality company because you're getting better value. So I think it all depends on the quality of the company, but a lot of the experts say you should never average down. It's not the way you should invest. Anyway, so end up with an average around $2.10. In fact, you're loving life right now when it comes to its Joe Blog. So it's fantastic to see it now. Buy and hold definitely worked for this one. So let's have a look at the chart for Nuix. So I am trading Nuix right now. I have traded this in the past. We have to look at the right category here. And definitely things are moving in the right direction for Nuix. So I've originally started to trade Nuix back in July of last year when the share price just got above $1. There was a beautiful breakout. For some reason, I put a couple of lines there. Beautiful breakout. On the 20th of July. Forget what exactly that was. It could have been a positive trading update. Share price on that day rose 36.6%. Even before then, it was showing signs of a turnaround. Share price low for this company was back in October 2022. And even then, there were signs the sentiment was starting to shift and also the trend. But that was the breakout, in my opinion. July 2023, you could have bought shares in this company just above $1. Now, I got out of that trade when I think the share price may not have doubled, but share price had increased. I should have just maintained a holding because since then, share price has gone up significantly. The other thing to note here, so there's me buying some more shares in Nuix, so another trade. So even though I sold out at a price below that, it didn't stop me from taking another trade. There are some investors out there, some traders who just refuse to buy into a company after they're sold out, which confuses me. Why not take advantage and just admit that maybe you made the wrong decision and take advantage of this beautiful looking chart for Nuix? So they released some sort of, must have been another trading update on the 20th of May, a positive trading update. And I bought probably about 7-8 trading days later. So I took my time taking that position and the share price hasn't quite doubled. It's actually getting close to doubling. So I bought at 294, share price now at 540. They released their results in August and share price took off. And this is an absolutely stunning looking chart. So right now, share price 540. So Joe Blogs is absolutely loving life right now because his whole holding with his averaging down has now more than doubled. It's almost tripled. The other thing I like to see is the volume. Look at the volume explosion the past month since they released their results. We saw a bit of explosion in the volume when they released that trading update. I'm assuming it was in July last year. Nice little increase in volume. There was also some increase in volumes before that. In fact, there was a nice little increase in volume as the share price moved towards this low. That's actually another good sign that there are people out there, investors out there thinking, oh, share price is getting to interesting levels. Maybe I should take a position. They are probably value investors, although I'm not sure if value investors would have been that keen on Nuix. Around that time, there would have been a lot of the experts saying, oh, this is a crap company, you shouldn't buy shares. So things have turned around for Nuix, that's without doubt. I'm not even looking at the valuation of this company. I am just trading it. I just love this particular chart and also love the volume. So we have two things going for it. Positive trading updates, positive financial statements or financial reports, and also beautiful trend in the share price and a beautiful volume as well. So Nuix moving in the right direction. So congratulations to Joe Blogs. Let's move on to Forest Hill, the comedian, 8462. Thanks, Michael. Good video. I'm not criticizing Forest Hill. Nothing. Comic relief is always important, no matter what. Anyway, Thanks, Michael. Good video again. Interesting day for me because after many days of thinking about it yesterday, I finally put an overnight order in for SRG Global on ComSec and the stock gets put on hold. I watched the presentation video this hour and that acquisition actually looks really good. Actually, I put some words into Forest Hill's mouth then, but the acquisition does actually look good. I said very good, I think. I'll be buying in tomorrow. Okay, so it's interesting. Nuix, I'm trading Nuix. I'm also trading SRG Global. Hopefully I'm not having influence on people. I don't think I am. And I like this one. I like the valuation of this one. So Nuix, I don't really know the valuation. It's just a chart. SRG Global, nice looking chart. And I also like the valuation. Had a really good financial numbers for the year. And also they made an acquisition. Everything I've heard about this acquisition, in fact, I haven't even looked at the acquisition in this company. Everything I've heard is quite positive, and that's why I think the market likes it. Okay, so SRG Global. So that's me buying at 93.5 cents. The chart looks good. There was a nice little breakout. Probably the share price moved into an uptrend back in February. So I was a little bit late to the party here. And there was a nice little breakout probably in April. So there's a few times we could have bought shares in this company. The first time would have been around about 70 cents. So the share price has increased about 50% since then. Now, they announced their results and the acquisition at the same time, if I remember correctly, towards the end of August. Share price did pop up. I think the share price could have popped up a little bit more, but you can see the share price went on a bit of a run after they made an acquisition or announced the acquisition. Share price has pulled back a little bit, and I think it wants to go on another run soon. These pullbacks are very healthy. Another sign that the pullbacks are very healthy is when you look at the run in the share price, really good volume. On the pullback, volume completely collapses. That's really a good sign that this is a legitimate pullback. It's nothing to be concerned about. The one thing I'd like to see is as the share price starts to go on another run, I'd like to see volume increase as well. So SRG Global, it looks pretty good. And not only did I take a trading position with SRG Global, I actually also have participated into their capital raising because the capital raising was done, was it 90 cents? I could be a little bit mistaken there. Maybe it was 85 cents. I just remember the capital raising price was well below where the share price is right now. So I'm just going to confirm it. And which one was it? Probably the Diona acquisition announcement. And where's the price here? I can't see a price. Maybe it's the wrong announcement. All I want to see is a price. And not seeing a price. 84 cents. Is that the... Yeah, 84 cents. Institutional placement, 84 cents. 83 cents. Initial price of 83 cents. So I have participated into the share purchase plan at 83 cents. And the main reason is when I decided that, the share price was well above $1. So why? Why wouldn't I? And I didn't take the maximum because the maximum was like $30,000, but maybe I should have. Anyway, so SRG Global, yeah, and still have yet to have a look at this particular acquisition. Not sure what's holding me back. Don't know, but everything I've heard has been quite positive. So thank you, Forest Hill, Sham G33. Anyone know when DGL and Gentrack release their financial year 24? Well, Gentrack won't release it for another few months, and DGL have released their results. So DGL, share price keeps on dropping the 30th of August. But for Gentrack, their financial year is a little bit different than the other companies. It's a New Zealand-based company. I'm pretty sure it's May and November. So let's just confirm that. Let me just go back to 1 year. So did they release anything in May? Yes. So half-year results in May, full-year results in November. So still have to wait another 2 months for Gentrack's full-year results. And let's have a look at the chart for both of them. Completely different charts. So I do have a position in DGL. I'm not just waiting for the turnaround here. I think the turnaround is finally going to happen, but who knows how low the share price is going to go. It's still in the downtrend. Share price keeps on dropping. And the reason share price keeps on dropping is the market just doesn't care right now. The market has no interest in DGL. All DGL has to do is one positive announcement, and I think the share price will turn. And this is what happens when the market just doesn't care. If the market doesn't care, there's no buying interest in the company, the share price will drift lower and will keep on drifting lower because shareholders are getting sick of this. They're just selling out. It doesn't matter the value. I think there's probably good value in this company right now. Doesn't matter to your shareholders. They see the share price dropping, share price not doing anything. They're getting FOMO about other companies whose share price are rising, and they sell out of DGL and buy into these other companies. So DGL has to release something positive to turn around the negative sentiment in this company. Now, I do think there's some value in DGL right now, but we just don't know how low the share price is going to go. So we're going from a negative looking chart, which is DGL, to a positive looking chart, which is Gentrack. Both of these, by the way, are New Zealand companies, although DGL have moved their offices to Australia, if I remember correctly. And this is Gentrack. And this is complete opposite. Thank you, Mouse. This is the very... I think there should be, maybe not studies, but this is a great chart to study. Go have a look at this chart since it listed on the ASX 2014. A beautiful looking chart. We see trends in the share price, long trends in the share price from 215 through to 218. There was a nice uptrend there, a pretty big downtrend from 218 through to 2021, a period, or 2020, then a period where the share price did nothing, went sideways, consolidated. That's the bottom. And then a beautiful 2-year period where the share price has got an absolute tear. A beautiful chart, a beautiful chart to study if you want to learn more about technical analysis. It does work. Because there was a breakout, beautiful breakout for this company back in November 2022 when they would have released their results. Again, results do matter. And in fact, if you look at this breakout, you could have bought at about, say, 220, and share price went sideways for about a month, maybe even over a month at 220, and the share price kept on rising after that. A valuation, this is probably a little bit stretched now, markup $1 billion, but I still have my position in this company. And I don't think I'm going to sell unless I see signs, unless I get a technical signal. So thank you for that question on DGL and Gentrack. DGL have released, Gentrack will release in November. Ryan Corol, Nexion Group has continued its voluntary suspension again until 30th September 2024. What's happening with them? Is it a negative sign? Thanks, Kneppy, for your thoughts. I think I've discussed this one before. It was something to do with an acquisition. And the thing is, you can't do anything about it. You just can't do anything about it because they're in suspension. So let's have a look at the most recent one. NNG or Nexion continuation of voluntary suspension, 15th of August. If they're doing this for a month, they're going to do another one soon. To the commencement of trading, 30th of September. The proposed transaction is significant and demanding. We continue to make good progress, and directors are satisfied with achievements today. So, just based off that one paragraph there, this is something I don't think you should be concerned about. And the very fact is, there's nothing you can do right now. Why worry about something you can't do? Don't stress out about it because there's nothing you can do about this particular issue with Nexion right now. They're in a trading halt because of an acquisition or a transaction. It could be very beneficial for the company in the long term. And so there's just no point stressing about it. So in these sort of situations, when a company I own is in a suspension, I just don't even think about it. I just don't think about it. There's no point. Don't stress your life out about it. Just wait until they come out of suspension, and then you can make a decision when that happens. And it has happened to a few companies I own, particularly story stocks and smaller companies. They do get into suspension for sometimes for a long time. But here's the thing. They don't want to be in a suspension for more than 2 years because then they will be kicked out of the ASX. That will happen. I'm pretty sure that is the rule. If they're in suspension for 2 years, they will be kicked out of the ASX. I'm just going to confirm that. 2-year suspension, kicked out of ASX. Let me have a look. Trading halt suspension and removal. I want to see if it says it here somewhere. Chapter 17. It's 5 pages long. Should I be doing this in the video? Probably not. There's probably something in here that talks about 2 years. Compulsory acquisition, failed to So I know some companies have been kicked out because they failed to lodge documents, fail to pay annual listing fees, and okay. So when removal from the official list occurs, in fact, funny enough, removal not at entity's request. General may at any time remove an entity from the official list if ASX opinion any of the following appeals. The entity is unable to or unwilling to comply with or breaks a listing rule. The entity has no quoted securities. It is either appropriate for some other reason. Automatic removal after a long suspension. It's been deleted. That part's been deleted. So maybe it's not a 2-year rule, but for some reason I just thought it's 2 years, but I could be wrong. Anyway, so that's the next thing. So no reason to, in my opinion, no reason to fret just yet. It's not a negative sign. It's not a negative sign. It's a possible acquisition. Okay, Ruben says RFG would be a good cigar butt. Cigar butt? RFG would be a good cigar butt. I reckon that's over my head. I have looked at this company previously. Their results actually, I did have a look at the company's results, and my first thought was, it's not that bad. Retail Fur Group. This has had a pretty torrid history on the ASX, particularly 2016-17. 2016-17. Do I have my years right? Yeah, 2016-17. Share price did fall a fair bit into 2018. And so I haven't looked at this company since then. And it's not the sort of business model I do like. But their results did look sort of interesting. Do they have I like tables, RFG. Give me tables. Don't just give me paragraphs of letters. Give me tables. So I'm going to have a look at their presentation. Or maybe their Appendix 4E here. Here we have a table. So I've probably had a very quick look at this and I went, oh, it's not bad. So revenue up 9.8% to 131 million, EBITDA of 29.2 million, profit of 8.7 million, profit before income tax of 8.7 million, profit after income tax of 5.8 million. So things have turned around for this company, but that's all I went. That's as far as I got. I didn't look at anything else when it comes to Retail Fur Group. The next thing I wanted to see is how did the market react? And obviously the market, what's happening there? Obviously the market, nothing really. Yeah, nothing much is happening with Retail Fur Group. Share price is trying to move up if you look at a weekly chart, but I still have no interest with Retail Fur Group at this point in time. But the results on the surface look pretty good. I'm not sure what it means by good cigar butt. Maybe I am just stupid. Good cigar butt. I'm going to Google this. Oh, okay. Warren Buffett. You buy a low price stock in struggling company. I see. Yeah. Involves finding companies that have been bent down by the market and trading. So this is like a turnaround. Okay, yeah. Although Warren Buffett says turnarounds seldom turn around, but I don't actually believe that. Cigar butt investing is an investment strategy that involves finding companies that have been beaten down by the market and are trading less than their liquidation value. Okay, so yes. When I saw Cigar Buck, I just thought of this video I saw about this guy who was hooked on heroin and he was homeless. And what they would do is they would go around looking for discarded cigarette thingies, whatever you call them, and then collect as many as they can, and then just form their own cigarettes, buy all these discarded cigarette butts. And that's what I was thinking about. But yeah, it now makes sense, Ruben. I am stupid. Okay, thank you for that. And yeah, possible, but I haven't had a closer look at Retail Fur Group, but their results did look interesting on the surface, but you have to delve a little bit deeper than on the surface. Klimaru, thanks for answering my question on podcast, mate. Came across Baby Giants, which is no longer around. They gave up. Recently also have been loving it. Money of Mine is another one I've been enjoying. Yeah, I'm not the biggest fan of mining, so I don't listen to Money of Mine. But yeah, unfortunately, Baby Giants, the 3 guys who do that, maybe 4, I think just spend a little bit too much time on that, and they don't get the rewards for what the amount of effort they put into it. So unfortunately, Baby Giants has gone bye-bye. Video associates. Wow, what Yancoal have been up to. I'm going to have a look at the Yancoal chart. Yancoal chart. Share price has been beaten down because they decided not to sort of suspend the dividend for maybe one half. I have no idea. And the market hates that because for some reason, well, no, I do know. The Australian investor is obsessed with dividends, obsessed, absolutely obsessed. In fact, I've been told only high quality companies give dividends. No, what was it? Someone said to me, the way I decide whether a company is high quality or not is whether they give a dividend. No, that means you would say Berkshire Hathaway is not a high quality company because it doesn't give dividends. In my opinion, dividends do suppress innovation and growth, not only for individual companies, but also the country at large. That's just my opinion. I think there'll be companies out there who will be much better today if they suppress their dividends a little bit more. And that's one of the reasons I like CSL. They have a token dividend, but they put a lot of their money they do make into the business to grow the business for the future. That's what most companies should do, not all companies. Anyway, I'm not sure Yancoal should do that. I don't know. I actually don't mind mining companies to give most of their profits back as dividends because most mining companies' management have had a horrible history of growing their company. Not all, but a lot of them have. They've made some awful decisions in the past, acquisition decisions, that sort of thing. Anyway, so Yancoal, is this a good time to buy Yancoal? It says dividend yield is still 6%, but that's maybe not as true. P ratio 5.66. It's all dependent on the coal prices. If coal prices go up, Yancoal's probably a good bet. Weekly chart for Yancoal. In fact, the weekly chart doesn't look that bad. If you have a look at the long-term view, this is like a 7-year view here. It doesn't look that bad. A little bit of a dip. So maybe a buy the dip situation for Yancoal. James 1638, interested in your thoughts on technical analysis, specifically how far can a stock price rise before it needs to consolidate before going on another climb? Does the RSI always require correction? How long can it go on the overbought side before it needs to correct? I'm a holder. I sit in ask as this chart is now sitting in at the 70 range. How far can a stock price rise before it needs to consolidate? That's a really hard question. I have seen some companies being in overbought for a long time. I'm trying to think of a company that has gone on a really good run. What company has gone on a really good run? Let's go back to Nuix. It also depends what you'd find as a consolidation period, because when Nuix increased on the 20th of May, share price on that day rose 25%. And then the share price went sideways, consolidated for over a month, for a month and a half. It went sideways for a month and a half. Yes, I had shares in this company and share price went sideways for a month and a half. Even after the run up, after they released the results, share price went sideways for about 3 weeks. Did nothing, and then all of a sudden it shot up. I don't think there is a set time. What I'm going to do is just put in RSI here. I don't look at RSI all the time. And I'm just going to see if it was... So it got overbought into the overbought section in RSI on that climb and then went sideways, and then the RSI dropped. And then again, it did it here. So in 2 times for Nuix, and this is a small sample size, when it became overbought in the RSI, it then went sideways for a period of time, but there was no sort of indication on when the share price started to go up again. In fact, it's been overbought. Nuix has been overbought, literally overbought, since the 19th of August, and share price keeps on going up. So those who just looked at the RSI and then sold because, it's overbought, have lost out a little bit here. And if you go back through time, there's periods here, the share price became overbought, and we didn't see much of a drop in share price, but we did see the share price drop a little bit. On the flip side, when it became oversold, that was indicating near the bottom. That's happened a couple of times here. That was a time to buy. So I don't think, and this is just me without doing any research whatsoever, I don't think there is any sort of period or time how far a stock price can rise before it needs to consolidate. But I do know when the share price goes on a really big run, I become more nervous because the longer it runs, the more likely you're going to see a significant pullback. So that's the main thing. And I've seen this, we saw this with Drone Shield. This is the perfect case. And I have heard some experts say, no, there was no indication the share price was going to pull back. But as the share price kept on rising, so from about end of May through to the 15th of July, share price kept on rising. Without doubt, this was significantly overbought, and it was. Look at the RSI, significantly overbought. And as I was trading this, I'll get rid of this because I've sold out of my trade. As the share price kept on rising, I was thinking, oh, as share price keeps on going higher, the likelihood of the share price dropping a fair bit is becoming more and more likely. And then just fluke that I timed it almost to perfection. I sold it on the 15th of July, my position. The next day, it opened up higher, but then all through that day, the 16th of July, share price just dropped, fell 22% on that day, and just kept on dropping. What needs to happen in this sort of situation, you need to see the share price rise, and then you want to see a consolidation period. If you saw a consolidation period after this significant rise, that's so healthy. That is really powerful consolidation, sort of like Nuix. What's happening now? Share price going sideways, and the share price actually has gone higher. That's a really powerful signal. But most of the times when I see the share price going to run like this, sort of an exponential rise, I just see pain in the future. I see the share price more likely is going to drop like a rock. It all comes back to profit taking, because there would be a fair bit of traders in this, day traders, they see the share price going like this, and as soon as they first see the first signs of a shift in sentiment, short-term sentiment, they will get out, and that would force selling pressure on the company. So I don't think there is a set amount of time. You just have to keep an eye on, it's just probability, in my opinion. And also, sometimes the share price doesn't consolidate. We saw that with Drone Shield. Share price dropped a fair bit. Does the RSI always require correction? No. We're seeing that with Drone Shield. I mean, not Drone Shield, Nuix right now. It's still overbought. Doesn't mean the share price is going to pull back. And we can see with a consolidation period, that's when the RSI can fall. That's why I like consolidation periods, because a consolidation period gets rid of all the day traders. That's the other thing I like about it. How long can it go on the overbought side before it needs to correct? So yeah, let's have a look at Obsidian right now. So this is a little bit late. Obsidian. And so he would have released, so James released this probably August the 17 to August the 20. I would have said maybe the August the 20, August 21. Oh, yep, I would say August 21, and that was the peak in the share price. We saw the share price get into the over on the RSI to the overbought section on the 29th of July, 29th, 30th of July, and then the share price did pull back. Then it went on another run. It barely got into the overbought section, and then it's pulled back since then. So share price has pulled back a fair bit, 9 to 6.4 cents. Now it's moving towards the oversold area. Now, the other problem with Obsidian is this company is, what's the best way to say it? It's going to be fair. It has the attributes of being fairly volatile because they're not quite profitable just yet. I don't think they are. Let's have a look at their financial results. They released their results on the 29th of August. Let's see how the market reacted. Yeah, the market didn't react that well. Share price down 10%. And I doubt they were profitable. So revenue of 37.1 million, underlying EBITDA loss of 3.4 million, underlying EBITDA loss in the second half 0.6 million, operating cash outflow of 7.1 million. So I don't think the market really liked these results, and that's why the share price also fell on the 29th. So the chart is looking better than it has, but I also don't like the volume. The volume has really pulled back. So Obsidian's not for me, but I'm not sure I would look. I don't look at RSI all that often. On occasion I will, but I can sort of tell without even looking at RSI whether a company might be overbought or oversold, just because it just makes sense. Just makes sense. That's just me. But I never use the RSI as a decision tool. So a lot of times it's just feeling like that Drone Shield. It was just a vibe and feeling, and I just knew by probabilistically the share price would eventually pull back, and it could have pulled back quite significantly. And it was just by fluke that my timing was pretty good with that decision. And just to prove that, EZZ, the other day I was thinking, oh, maybe I should take profits here. Share price got up to 340. I went, oh, maybe now is a good time to take profits. And then the share price pulled back the next day, and I didn't do anything. So that just shows you that sometimes you can make a decision or not make a decision, and you can see what happens. Now, this is another one where I would say it was pretty oversport, without doubt. On that day, it got to 340. Yep. And you can just see this company has been overbought a lot since April, and the share price has risen almost fivefold since then. In fact, it's almost rose sixfold from the low to the peak in about 5-6 months. So that means the share price has been overbought quite often. And when I was thinking of selling it, it was overbought. Now it's getting to the point where it's sort of not overbought, not oversold. Anyway, that's hopefully I've helped. And I do think, and another thing I should say here is it takes time to learn. You're not going to learn everything by reading books, everything in 1 year. It's taken me about 8 years before I started reading technical analysis books and started learning about it. And I still am learning. There's still a lot I don't know. And I think also everyone is different. There are things I look at that other people won't look at. There's things other people look at that I won't look at. I very rarely, if ever, look at MACM, what it's called, the moving average. What's it called? MACDM. Whatever it's called. Yeah. Anyway, you know what I mean. Sham G33, what a week. Looking forward to Sunday's TA video. Well, hopefully it was everything to your liking. Gazmo, Humm results with just average. Just the company share price has been previously smashed by bad results in the past. Let's have a look at Humm, because this Humm has popped up on my radar recently, and it broke out. Yeah, a lot of volatility in this company. I kept on the RSI, and you can see this company has been oversold since they released their results. And share price got to the resistance level at 72 cents and then pulled back. So that's here, technical analysis does work. Resistance and support levels work because it's just psychology. We just knew share price of this company got to 72 cents in February, got to 72 cents when they released the results, and share price pulled back. People knew 72 cents was an important level for this company. They might have known consciously, but maybe subconsciously as well. And then the share price pulled above 72 cents. I'm going to call it on the 6th of September. It struggled for a few days, and then it pulled above it on that particular day. This chart actually looks pretty nice. The other thing to look at is volume. Really good volume coming in. Again, it's been oversold via the RSI for a while now, for about almost 1 month. But the share price hasn't pulled back. That's Humm. I have not bought shares in Humm, by the way. Okay, say something. MFG, LLC, Megaport. So Magellan Financial, Lease, Megaport have also started an uptrend, so definitely worth a look. Okay, so let's have a look at all three of these charts. He also loaded up on ServiceStream 3 days back. So I was trading. Let's have a look at ServiceStream first. I actually was trading ServiceStream, then I took profits. And this is a case where I probably should have held. I took a position in ServiceStream. When was it? It was way back in June last year at about 75 cents maybe. And then I sold, so I forget when, and probably shouldn't have sold. There's no reason for me selling. You can see here with the RSI, ServiceStream was in the overbought for more than a month and just never pulled back, did it? So yeah, I'm just getting rid of our RSI, by the way. Just getting rid of that. And chart looks brilliant. ServiceStream chart looks pretty nice at this point in time. Anyway, so no reason to be disappointed by ServiceStream. Magellan, I took a trade position in this one. I thought it was breaking out. Looked definitely like it was breaking out in the middle of August, and then it's pulled back. It showed the same signs back in August last year, and then pulled back. So without doubt, between 10.50 and $11 is a really powerful, strong resistance zone for this company. In fact, I'd say 10.50. That we'll say that zone. And if I see the share price of this company get above $11, that would be all bets off. Is that the right word, terminology? I would say that's a breakout if it gets above $11. Share price pulled back. One of the reasons why the share price pulled back is they went ex-dividend. I'm pretty sure they did, because I remember getting some money. They went ex-dividend on the 20th of August. Yeah, and that is the day share price pulled back. I'm just wondering if that's the whole reason why the share price pulled back after that, and it's just a dividend. They also released their funds under management. It's a nice dividend yield, by the way, and went down 35 cents. I can absolutely understand that's the reason why. They also released their funds under management on the 5th of September, and it was a little bit disappointing. I was hoping they were going to see funds under management growing, or there was going to be an inflow. But if I remember correctly, there was a net outflow. So it was slightly disappointing, that particular announcement from MFG. Lease, I'm not sure this one looks any good. And this is, maybe starting to look a little bit better. Now, it's had periods where it was starting to look good. We saw that in July 2023. We saw it back in April 2022, also December 2020. And those good times didn't last very long. So is this going to be another example of Lease looking like it's starting to break out, starting to move into an uptrend, and it just disappoints? So I'd probably put this onto my watch list. I don't think I have on my watch list, by the way. Oh, I do. I have in my breakout watch list. So I probably put onto my breakout watch list because of what happened on the 25th and 26th. No, not 25th, that was a weekend. On the 23rd and 25th, 6th of August. And the share price has done quite well since then. So this is a potential interesting looking chart. At this point in time, I'd just say potential. Megaport, I have a feeling this one is not going to be looking good. The company released their results on the 22nd of August, and it was disappointing. The previous day, on the 21st of August, share price rose 5%. And I just remember thinking that. I do remember this. I knew they were releasing results on the 22nd. I saw the share price rise 5%, and I was thinking, someone knows results are going to be really good. No. Sometimes the market doesn't know. Sometimes the market might be guessing. In this case, they guessed wrong. I think the market was thinking that the results are going to be good. Results were not good. Share price down 20.95% on the back of the results, and share price has kept on falling. Share price now is at $7.58. So this is definitely a case where it looked like the share price was starting to turn, sentiment was starting to shift, but the market got it wrong. And this is a perfect case of it's sometimes good to remain patient, because even though there were signs, it was not breaking out. It was not moving into an uptrend, even at that point. It was just too quick. It's too soon. Anyway, so Megaport not looking good at this point in time. So sort of an advantage of doing these, answering your questions 3 weeks late. Martin Pleasant. Been watching Moneyme a little bit now as well. Very interesting momentum happening. But the stock itself, although is dirt cheap as well for what it is, definitely checking full pullback. Thanks, Kneppy. So I have taken position in Moneyme at 10 cents. And I do believe that there is definitely an argument. This company is dirt cheap. I think without doubt. I just love this looking chart. Share price has dropped a lot. Share price going sideways for a long period of time. Share price has 10 cents has been a really strong resistance level for this company. We saw it struggle to get above 10 cents in January of this year, then pull back. Again, it struggled for a little bit of time in August, start of August, and then it pulled through on the 20th of August. And then went a nice little run up to 14 cents and then pulled all the way back to 10 cents. And it's tested 10 cents 3 days since then, currently at 10.5 cents. So I have taken trading position in this company, a small position, because I'm not quite convinced just yet. But this has the potential. Not sure if the share price will get back up to, say, above $2, because I'm pretty sure they have done a capital raising. So shares and issue have increased. But this is or has the potential to be a 10-bagger from here. The potential. Doesn't mean it's going to happen. This is the sort of company I'm looking for. One that has been beaten down by the market, sort of like the cigar bar. Wow, cigar bar. Beaten down by the market, maybe unfairly, and a few companies in this sector, you might be argue others showing the same things, maybe. Beaten down by the market. The experts hate these sort of companies. Every single time one of these companies is brought up on Ausbiz, they call, oh, they hate them. Oh, it's the wrong part of the cycle. And I think the market is showing us that things are starting to possibly move in the right direction for these companies. And this chart is starting to look really good. But I'm still not there yet to take a full trading position in Moneyme just yet. When will I do it next? If I see the share price get to 15 cents, that could be interesting because that would confirm the share price is moving into an uptrend. It has to get above the highs we saw back at the end of August. So Moneyme looking pretty good. Hutcho, $10,000 on DGL. Assets exceed the current market cap. Again, I have not looked at DGL's results. And I have heard some people saying the results are actually not that bad. The results are actually pretty good. So I have not had a look at the results just yet. I probably should. In fact, I haven't looked at any results the last few days. In fact, the last week. I don't know what's holding me back. I don't know. Just not that interested at this point in time. Maybe that's my technical analysis side winning out, because technical analysis, you don't look at results, you just look at the chart. And sort of, I do understand the attractiveness of that. Just looking at charts, don't care about the results. Don't have to look at financial statements. Just look at the chart. But I do think it can play a role. Like Moneyme, you can see value. And I have looked at research that does suggest that even in technical analysis, valuation matters. You get much better returns if you trade companies that are good value. Anyway, so I'll have a look at the DGL results at a later time. Maybe today. Maybe I'll do it today. Adrian, unfortunately, I suffered with Megaport today. So this is when Megaport dropped. But done well with Whitehaven and Hansen. I'm pretty sure you mean Hansen, not the boy group. Hansen, the Mbop group. I'm pretty sure you mean Hansen Technologies. But maybe you've done really well with the Hansen, the band. And they're probably pretty old now. Because that was 1997 Mbop band. Is it even spelled? Oh, it's with an O. Hansen has an O. What is their net worth? Are they still around today? Pretty sure one of these had like 20 children or something. There must be like 30s and 40s by now. Yeah, which Hansen brother has 7 kids? Gee, hold it back. Anyway, so Hansen, let's have a look at, I've already had a look at Megaport. Let's have a look at Whitehaven and Hansen Technologies, not the group. Whitehaven. I just remember looking at this chart recently and not being that, oh, that's right, yeah. Share price of Whitehaven moved to this support level at $5.60, about that mark. That's the lows in the share price back in June. Share price fell a fair bit in August. Went from $9 down to $5.60. Share price has fallen 33% from the highs. Not sure what has caused this. I don't remember thinking or seeing that coal prices have dropped. Something to do with the business, I don't know. If you have a look at the weekly chart for Whitehaven, yeah, nice little support level. It could be a time to buy some Whitehaven coal, maybe. Had a nice day on Friday, up 4.34%. And in fact, the last 2 days, it's gone up a fair bit. So a couple of good days for Whitehaven. Look at the volume as well. You can see an increase in volume since, about the last, towards the end of August. So that could be a sign that the fund managers are going, oh, there's some value in Whitehaven coal. But I would have loved to have seen the peak in volume when it hit the bottom. That would have been a really good sign that the bottom has been reached, possibly. And Hansen, HSN. This is a company I have owned in the past. I don't like this chart, however. Don't like the chart. It's in a downtrend. It's been a downtrend since February. And honestly, if we have a look at the weekly chart for Hansen, it's done nothing for a few years. In fact, if you have a look at the chart, and I do remember this company as a really good company to own back through the 2010s, and definitely it was. But from about 2016 through to 2020, share price went sideways. Share price went on a run in 2020, 2021, and the share price has gone on a sideways, even a downward trajectory since then. So seems like over the past 8 years, share price has gone up in spurts and then goes on a consolidation period. So I'm not sure if I would consider. Ooh, where's my head there? Not sure if I consider Hansen Technologies as a quality company. But I have to have another close look at it again. If it is, maybe now is the time to think about buying some shares in this company. P ratio says 42.7. Not sure if I believe that. Maybe their profit was a little bit lower. Maybe there's a one-off or something, and maybe it's not a real profit. We can see. Yeah, we can see. Yeah, their profit was half from what it was last year. So I would say their P ratio is more like 20, 21 than 42. Anyway, thank you for that, Adrian. Sajid, hi Kneppy. The best way to find the $8 sale would be to download the CSV file and filter for $8. The highest price of uni for the day was $7.99 for 4. Oh, I remember that. Yeah, I remember going through that, but I can't remember the context just now. But I do remember going through that. So thank you, Sajid. I've never thought of doing that. CSL. Not even sure if I want to do that. Jacksu bought some Moneyme at 10.5 cents. Remember what you're saying. Thanks, Michael. You're welcome. What do you think of LULU on the Nasdaq? I'm assuming you mean Lululemon. So this is from Panda Magic Hero. Lulu, I'm assuming you mean Lululemon. Also, is it possible for you to do an episode on AI-related ASX companies? Thanks. Maybe I'll do that. Lululemon. Not the sort of company, not the sort of store I would ever go into, I think. Let me have a look. You just mentioned athletic, and I do like athletic gear, but I just assumed this was for females. I could be wrong. It's got men's new arrivals there. Yoga clothes and active wear. Maybe I'm being a little bit too harsh. Maybe this could be sort of the clothing I'd like, maybe. It was expensive though, $89 for a Vent Tech short sleeve shirt. I could be being they're expensive. They're expensive. Fundamental t-shirt, Vent Tech short sleeve shirt. So this is what they do. Okay. So maybe I'm being a little bit too harsh. I just thought they were like a sports athletic company for women. I didn't realize they were for men. That's just some sort of bias I had of this company that has been there for maybe 5 to 10 years. Anyway, let's have a look at Lululemon. The other thing I do know about Lululemon, it did look really expensive. Like the markup was really high. So current market cap is $34 billion. $34 billion. This is the weekly chart. The weekly chart from 2017 to 2022 looked really good. Share price went from $60 to $480. Nice little 8-bagger during that period of time. Share price is in a downtrend, however. Definitely see that by the daily chart. They must have released something pretty negative on the 22nd of March. Share price on that day dropped 15.8%. That was the time to get out. Share price has continued to fall since then. Share price in a downtrend. Is there any value in this company right now? I'd probably ask myself that question. I'm not going to do it now. Says the PE ratio is 20. So straight there, maybe there is value. Really nice growth in profit. I'm going to have a look at FinChat. I've decided to have a closer look. PE ratio 20. Lululemon Athletica. What's in the name Athletica? I just called it Lululemon. I'm going to have a look at a few things. So revenue, beautiful growth in revenue. Now the revenue in the last year has flattened. Is that trailing 12 months? Yeah, trailing 12 months. Margins. Do you like the black or do you like the white background in FinChat? I'm going black here. I'm just going to have a look at margins if I can find it. They've just changed, completely changed how this is set up. And so I went to ratios. I'm just going to have a look at margins if I can find it. So this is exactly what I do when I research a company. Revenue, look at margins. So I like revenue growth. I like the margin, gross margins increasing. I'm not sure they could increase much further from here. And without doubt, the profit's going to be increasing. So let's just have a look at this overview of the company. So markup cap, again, it's pretty high. P ratio 20.6. Price to book, EV to sales, price to free cash flow 17.97. Return on equity 35.3. It's pretty good return on equity. That's a 5-year average. So that is suggesting this company is high quality. But are they like a fad company? That's probably the other question. Is this a fad company? Yeah. So revenue growth over the last 10 years, 19.54% per year. Earnings per share growth over the last 10 years, 22.79% per growth. So really nice history from this company. So you can definitely see why the share price has increased a lot. But a P ratio of 20.6, there could be value in this company if the company keeps on growing like they have over the past 10 years. So that's probably the big question I have about this company. I'd like to have a closer look at Lululemon. But I want to put this out there, if you think this company can continue to grow, maybe not at this rates, maybe 10 to 15% per year, the revenue, earnings per share, I would say there's value in this company at current levels. Share price has pulled back. So this could be a buy the dip situation for this company. Okay, that's all I got for Lululemon. And I have learned a little bit about this company. I've always assumed women's company and didn't realize they were mostly athletic gear. There you go. MAF had a great day. So MA Financial is on my watch lists, and I was very close to buying some shares in this company. So they released their results, and the market loved it. And it can just show you how quickly sentiment in a company can change. They released their results in February. Market hated it. Share price dropped 20% on that day. Share price did keep on falling. Company released their results on the 22nd of August. Market loved it. Share price up 16.3%. And the share price has continued to climb. Look at that. So if you do put the RSI, I'd say this would have been overbought. And has it continued to be overbought? Maybe. So it's in that high section. Yeah, it's very close to being overbought. So that's telling me, get rid of, why can't I get rid of RSI? There he is. That's telling me what's happened since the company released their results. There's a bit of strength. The market has really liked these results. We haven't seen much selling. Our share prices continue to move up. I think this demands some more research on my part. MA Financial. Maybe I should not be. Maybe I should not do any research. Just take a position, trading position in this company because it does look pretty interesting. It says the PE ratio is 35.75. I'm not sure if I would believe that. If you do have a look at their results, yeah, profit was down from 44 million to 28 million. And I'm just thinking maybe there was a one-off in there. So better indication of the PE ratio would be, say, profit of maybe 40 million, which means the PE ratio is like 20, 22. Anyway, I'm going to have a closer look at MA Financial. Okay, Forest Hill again. Woodside, 52 weeks low is worth a small position for a short-term trade. I actually have thought about it. I'd wait, and Scott has also said, I'd wait for a break above 35 to 40 personally and watch if an inverse head and shoulders form. No way, they got plenty further downhill to go. And this shows you what a market does. Everyone has different opinions. I have been following Woodside for a while now. And one of the reasons I've been following Woodside is because there was I think it was Osborne's Core, and they had a couple of technical analysis or experts on it, and they both said $27 was a really good time to take a position in this company. And one of them said it was their largest trading position. And I was like, why? I just did not understand it. Why this would be their largest trading position. Even when they all started talking, I just did not understand it. And the share price has fallen significantly since that time. So I think on that episode, the share price of Woodside was like $29, and it was his largest trading position. Share price is in a downtrend. That's the one thing clear about Woodside. Share price is in a downtrend. And even though share price did pop up a little bit, share price is still in a downtrend. And that's the first thing I take. Not only that, share price fell below $27. That was the support level. So let's have a look at the weekly chart for this company. The weekly chart looks ugly, but it's getting to the point where maybe there's some value. Maybe, but I'm not there yet with Woodside. This is not a high quality company. This is the complete opposite of a high quality company. And I'll be honest with you, if I had a decision between trading a high quality company and low quality company, I'm going to pick the high quality company. And I'd say Woodside, and I'm going to be fairly harsh on Woodside here. I think Woodside is the lowest quality company in the ASX 20. I'm going to say it right now. I always thought Telstra was, but I think Telstra is now a little bit better than Woodside. Santos is close as well. And the main reason behind that is if you've held Woodside over the past 15 years, your capital's gone backwards. Share price, the chart over the last 15 years has looked absolutely ugly. In fact, the last 16 years has looked absolutely ugly for Woodside. And I just don't know why everyone is so obsessed with this company. It's a low quality company that is maybe good value. And I'm just saying that right now. It's maybe good value. Anyway, so a lot of different opinions there about Woodside. I'll give a nice little like for all three. Scott says, my stock today was also Fisher & Paykel, but TNE was the weekly bests. Probably no complaints about either one. So I'm going to have a look at charts for both of these companies. So I'm trading Fisher & Paykel. I own Technology One. So there's a big difference between the two. So I'm trading Fisher & Paykel. This was just a breakout on the 22nd of March, $24. I might consider Fisher & Paykel Healthcare to be a high quality company. I'm probably, if I delve a little bit deeper, I probably would come to that conclusion. Probably. The laziest way to determine whether a company is high quality is just have a look at the long-term chart. So this is Fisher & Paykel Healthcare going all the way back to 2012. Back in 2012, you could have bought this company for $1.75. It's now $35.37. Don't have a look at what's happened since 2020. This company has been negatively and positively affected by COVID-19. You can definitely see that with the share price pulling up in 2020 and then pulling down 2021, 2022. And now the share price is at an all-time high. You didn't realize that. Share price for Fisher & Paykel is an all-time high. So let's go back to why I traded this. Share price not doing much. And then share price sort of broke out. It really started to move into an uptrend in January of this year. There was a nice announcement from this company, and I'm assuming it was an announcement on the 29th of November. So maybe it was results. In fact, I'm going to have a look now. Fisher and Paykel, 29th of November. We'll go back 1 year. So it's almost a year ago. 29th of November, or half-yearly reporting counts. Okay. So obviously, these were good half-year results from Fisher & Paykel because on that day, the share price bounced up 7.8% on pretty good volume. And then the share price went sideways after that. That was a shift in sentiment and the shift in trend. I bought on the 22nd of March, on that day, at $24.01. I don't remember if they released anything that day, 22nd of March. Yes, they did. Fisher & Paykel updates financial year 24 revenue and earnings guidance. So this was an upgrade. If you know anything about me, you know I love upgrades. In my opinion, they are the most powerful type of announcement. And a lot of times I will buy on upgrades. And that's exactly what I did with Fisher & Paykel. Bought on $24 on that day, to be exact, $24.01. Then I watched the share price pull back not long after. In fact, you could have bought Fisher & Paykel on the 5th of April at $22.94. But I remained patient. That was not a sell signal for me. Share price was in an uptrend. I could have been a little more patient, buy in on a pullback. I did not know the pullback was going to happen. Anyway, share price has gone up. And then the company released something positive again on the 23rd of August, which was profit guidance. 2 positive upgrades in a row. That's why the share price has gone to a new all-time high. So share price has gone from $24 to $35.37. So share price has almost increased 50% since I bought. So this is a trading position for me. I bought on an upgrade. I didn't buy the company. I just bought on an upgrade. And I do think there is potential. This company could be considered a high-quality company. Now, and the chart looks pretty good. So that's why this was the stock of the day because of the 23rd of August upgrade. Now, Technology One is a company I bought for the longer term. This is not quite a trading position. Now, in saying that, I almost took an additional trading position in this company. So on this particular day, what day was it? The 22nd of May, they would have released their results that day, because this company also released results out of sync with the rest of the market. Was it 22nd of May? Was it? Yes. 22nd of May or 21st of May. They released the results on 21st of May, the half-year results, and this was a classic breakout. Actually, no, it was the next day. They released the results on 21st of May, and it wasn't a breakout that day, but the next day it was a breakout. And really big volume on the day they released the results and the next day, the 22nd of May. And that was a beautiful breakout. Share price didn't pull back all that much over the next 5 trading days. A beautiful breakout. And because I was already holding shares in this company, I thought, oh, why not? Because I thought this company was quite expensive. In fact, if you listen to any Ausbiz The Call people, they would have said, it's way too expensive, even below $17. No way I'd buy it. And look at the chart after that. So if it was expensive at $17, is it expensive at 23? Probably. But for some reason, the market has went, we just like this company. Share price keeps on going up. So this is a longer term position I hold, but I was thinking of trading it and taking a trading position when they released the results on the 22nd of May. It wasn't the 22nd of May again, it was the 21st, but the breakout happened the next day. So thank you, Scott. Both those companies I do like. Luca Brasi says, please do a deep dive into MicroX. Okay, should I do that now? I'm not sure about a deep dive. Okay, I'm not going to do a deep dive. I'm going to be a little bit critical on MicroX. I have done a video on this company a long time ago. MicroX. Got to spell it right. Or maybe MX1. Micro. Maybe I didn't do a standalone video on the company. Maybe it was... I'm sure I've done a video on this company. I'm sure I did. Anyway. Oh, there's show all. Oh, there we go. I've done 2 videos on this company back in 2021. January 28, 2021 and April 22nd, 2021. In fact, I said, MicroX, an intriguing mobile X-ray company. And then I did a video on their Appendix 4C. So I've got past my comments. I shouldn't have done that. Thank you, Shu Percy. Anyway, so I've got to go all the way back down. So many comments. Sorry, people. So I've done a couple of videos on MicroX. This was 3 years ago. Can't believe it. I knew I did a video on it. And since then, I have not had a look at this company. And there's a few reasons I have not had a look at this company. And I would suppose one of the first reasons is, if you have a look at their Appendix 4C. And we're going to go back to, where is it? Here we go. So all I'm doing with MicroX, and I do like some of their technology. So a leader in cold cathode X-ray technology for health and security markets. So I remember having a look at this company going, oh, this technology looks really awesome, but it was a story stop. And I thought at the time, I'll just wait until they hit that inflection point of becoming profitable, cash flow positive. And I'm still waiting. So let's have a look at the most recent Appendix 4C. So 1.279 million in cash receipts for the quarter, $7 million for the year, operating cash flow negative, $4.3 million for the quarter, $6.4 million for the year. And that's with receiving $6.2 million in research and development tax incentives and DHS checkpoints contracts, whatever that is. Still burning through a lot of money. And so because of that, I haven't really paid any more attention to this company. So at this point in time, I just need to see the company. What I might also do is open up their cash receipts history. I don't have my spreadsheet open. It's taking ages to open. Anyway, so that's In fact, I could do it here. Micro X. This won't be cash receipts, but it will be, because I don't think they do quarterlies in FinChat. I don't think they do quarterlies. Let's see if they do quarterlies here. I don't think they do. And we'll have to have a look at the cash flow statement. Yeah, they don't. They don't do quarterlies. So let's have a look at the half year. Where is it? Where's half year? How do I change it? There it is. So I'm just going to open up. Oh, this might take a while to open this up. So I'm just going to open up or look at this company's cash flow from operations. Why not? Over a half-year period. So yeah, this company has been highly or heavily operating cash flow negative over the past 6 or so years. They don't have cash receipts here. That's what I want to look at. I want to look at cash receipts. So I suppose if we do have a look at revenue, which is a nice little proxy for cash receipts, it's fine. Am I seeing a growth in revenue? In fact, over the past 5 half years, we haven't seen much growth in revenue. So that is a little bit of concern, a little bit of red flag I do have when it comes to MicroX. So even though I might like their technology, the company still has to prove themselves to me. And that's just because I'm a little bit more, what's happening here? You can see I'm a little bit less tolerant. I can't move this. Oh, there we go. I'm easily frazzled when it comes to crap like this. I don't want comments. Get rid of you and you. No. And I want search. Where's my search function? There we go. MX1. Here we go. Oh, I've got it all in different formats here. So some of the form, it's not going to. I was going to do a nice little chart here, but I'm not going to do it. Anyway, so the main thing, and I'll just zoom in so you can see it. Well, apparently it doesn't want me to zoom in. Apparently you can't zoom in. Surely there's a zoom in function somewhere here. Cash receipts for this company it's fairly what's the word? It's fairly, I was going to say volatile. It's fairly lumpy. We had $3.7 million in the December quarter, down to $819,000 in the March quarter, up to $1.3 million. Some quarters here, the cash receipts are fairly low. Some quarters fairly high. So fairly lumpy cash receipts. Over time, it is growing, but not the growth I want to see just at this point in time. Anyway, so I like the technology, but just because I like the technology doesn't mean that the world's going to like their technology, and they are having a little bit of problem selling their technology at this point in time. It's a slow progress. So let's have a look at the chart. And I have a feeling the chart's not going to look very good. Yeah, the chart looks pretty ugly. In fact, on the 17th of April or the 18th of April, the company, 17th of April share price dropped 17%. And then on the 18th of April, it dropped another 5%. That was a get out sign on that particular day. I want to see if they release their Appendix 4C on the 17th of April. Let's have a look. We go back 1 year. 17th of April. Oh, they announced a capital raising on that particular day. And you can just see what happens when a company releases a capital raising. More than likely, it was done at a discount. The market hated it. They released a quarterly report on the 29th of April, and nothing happened on that particular day. So that was the catalyst for the share price to move into this downtrend. It was a capital raising. And the share price has fallen from above 10 cents to 5.6 cents. Chart looks pretty weak. So this is the market telling the management of this company, you need to become profitable and you need to be able to generate cash flow in your business. We are skeptical you are able to do that. So this is what this chart is telling me right now when it comes to MicroX. So I am willing to follow this company, not as closely as some other companies that are on that verge of becoming profitable and cash flow positive. But this company needs to show me and the market some signs they are moving into that direction or towards that direction or that goal. So thank you for that, Luca Brasi. Thanks for covering Vysarn. I meant to ask on yesterday's video if you saw their results. I'm pretty sure I did. Vysarn, for those who don't know, this is a water services provider company. No, water services company. It's something to do with that. Chart looks pretty good. Did I have a look at their results? Not yet, not in depth. I know if I have had a look at results by this. I'll show you what I do to tell myself I've looked at results. So in TradingView, I tag. So all the companies I've looked at, I've tagged it with this this color here, with orange color. So I've looked at Breville, CSL, Domino's Pizzas, the Vysarn, Nanosonics, NextDC, Telix. That's it. So I haven't looked at a lot of results so far. Maybe I've looked at a few others, but in my high quality portfolio, those are the only companies I've had a look at results thus far. So a lot of our companies I've just not looked at. I'm just looking at charts at this point in time. And Vysarn, by the way, no. And I think their acquisition, based off the market reaction, although it's a consulting company, I'm not the biggest fan of consulting companies. But the chart for Vysarn, beautiful looking chart. And look at the volume. You know why this gets me excited, this chart? The chart itself looks brilliant without the volume, but look at the volume. Look at the expansion in volume, increasing volume. That's another. Okay, I'm going to end it there because I wanted to keep this video at 1 hour, but I want to get through as many comments because I'm still a bit behind. So I should do some of these in other videos. I use Next. I get Nevexa. I get a lot of emails from Nevexa. In fact, the latest email was, if you change to us, we will give you a discount based off how much you paid to a share site. I don't know. I haven't used Nevexa. I'm not even sure if I tried it out. Anyway. Marky Mark says, health is a scam. I'm going to give that dislike. Health is a scam. What a weird comment. How is health a scam? So you're saying if you're unhealthy, if you have cancer, that's good? I'm not sure what you mean by health is a scam. Anyway, that's all I'm going to have it for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.